Happy Friday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Friday, September 22nd, 2023. We'll start with today's key macro event, which is the BOJ doubles down on ultra easy monetary policy for now. So the BOJ took it easy on investors today, holding its policy rate, yield curve control program, and forward guidance unchanged in the face of August inflation data that indicated headline and core CPI surprised consensus estimates to the upside, while remaining largely unchanged from above trend readings in July. Despite Bank of Japan Governor Kazuo Ueda's insistence that the evidence of a wage price spiral is a prerequisite for more BOJ rate hikes, it is only a matter of time, in our opinion, before the BOJ incrementally tightens monetary policy. Japan is the only major economy in the world in which its real GDP, composite PMI, headline CPI, and core CPI are at above trend levels. Inflation has been above the BOJ's target for 17 months, and the BOJ itself revised up its fiscal 2023 CPI forecast by 70 basis points to 2.5% in its summary of opinions today. Investors should expect the BOJ to contribute to more bond market volatility this fall. Their next meeting is on Halloween, so that would be quite the surprise. So transitioning to our daily rundown of performance here, across asset performance here. So we'll start with the U.S. equity market from a sector perspective. S&P having a huge, terrible week, down 4.2% week over week. It's being led to the downside by consumer discretionary stocks at minus 6.7%, outperforming your traditional defensives, healthcare minus 2%, and utilities minus 2.4%. Shifting gears to equity factor performance, as I mentioned, S&P down 4.2%, high beta leading to the downside at minus 5.5%, low beta outperforming only down 1.8% to the upside. So pretty standard dispersion there. And then you got growth actually leading to the downside minus 4.8%, and value only down 2.9%. People tend to think that value, they sort of lump bad businesses in the value bucket, which generally speaking, they are. They're much worse businesses than the stocks that tend to be in the growth basket. But generally speaking, when we do our grid asset market backtest, what we find is that when you're having a negative market environment, which typically inflation is the general dominant regime, and you also have negative market environments and deflation, value tends to outperform growth and when the market goes down. And that's I assume for obvious reasons, because obviously the ex-ante returns on something that's poorly valued are higher. But that's something that investors need to be aware of, that if the market does crash, you're probably going to see a repeat of what we saw in 2022 in terms of growth underperforming value. That's typically how market crashes develop from a factor standpoint. So shifting gears here to geographic performance, S&P is kind of leading to the downside this week. It is leading to the downside this week across global equities, minus 4.2%. It's got some company with China down 4%. And Brazil down 3.7%, outperforming this global equity matrix is Japan, which has been outperforming broadly all year. So investors not giving up the ghost there in terms of the positive dynamics we're seeing from a microeconomic standpoint in Japan in terms of improving the Ministry of Finance's drive to improve return on equity in that economy. Shifting gears, fixed income. Barclays Ag down 1.1% week over week. TLT again can't get out of its own way, now down 3%, down 3% week over week. It's down about 15% since we told you to sell your bonds in early May. It's down about 40% since the beginning of 2022. So clearly, this is not the diversification. It's not providing the diversification benefits to investors that they thought they would see in a negative market environment. Stocks down 4%, bonds down 3% this week, week over week. Currency performance. We got the dollar here flat week over week, outperforming in the currency market is the Canadian dollar at just a little bit north of flat at plus 30 basis points, and then down the Swiss franc is down almost a full percent week over week, alongside the British pound at minus 0.8%. Commodities. We got some reprieve here in the commodity space. So the DBC, the commodities index, down 1.3%. Commodities are being led to the downside by base metals at minus 1.5%, but it's pretty tight, pretty narrow dispersion across the commodity complex. The only commodity that's actually up week over week is precious metals here, DBP up plus 1.2%. And then lastly, crypto. Crypto is actually flat week over week in terms of the movement we're seeing in Bitcoin. You're actually getting a pretty good pop in Solana, up on nearly 5% week over week. And then leading to the downside, you got Ethereum minus 2%. And then you got Binance Coin at minus 2.4%. So, and then we'll wrap it up with our MyLombo dashboard, which we use to kind of help investors think about their very near-term tactical setup in markets through the lens of their their world-class trading ranges. Huge fan of this program here. The Bloomberg Dollar Index is up. It's overbought here, so that's a positive signal for risk. The dollar tends to be inversely correlated to risk assets. We got the VIX overbought here as well, overbought at a very low level. So if we did bounce back from the VIX, if this was a real developing market correction, you could see the VIX back off, but again, continue higher just in terms of taking a breather relative to the trading range. So we got neutral short-term and medium-term momentum in the VIX. So that's something to be aware of. It's this. We went from bearish medium and short-term momentum to neutral medium and short-term momentum. So that tells you that something's changing from a price momentum standpoint in volatility, which could be deleterious if we continue down that path. And then lastly with S&P, good spot to be buying the dip, covering shorts, buying the dip, increasing your net exposure, widening your net exposure, increasing your gross exposure. Again, just from a tactical standpoint, from a medium-term standpoint, obviously you got to source our research and subscribe to 42 Macro if you want to get our medium-term thoughts on what to do with your portfolio. We have often very specific and actionable portfolio construction and asset allocation guidance. So hopefully everyone enjoyed that. We'll catch you back here next week on Monday. Have a great weekend. Enjoy some football. Cheers.